Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It podcast. My name's Randy Smith, and I'll be your host today. And I'm excited to have Josh McCallen with us today. Josh is the CEO of VIVAMEE Hospitality. They focus on distressed hospitality projects. He's also managing partner of Accountable Equity and the podcast host of Capital Hacking. So, Josh, welcome to the show.
Thank you so much for a great intro. That is right. We're excited to be here, and we love podcasting. So thank you for inviting me on your show, Randy.
Yeah, glad to have you here. Well, let's kick it off like we always do. Can you give me your perspective on the current market and how you think it might be impacting passive investing?
So we're in the year 2025 when we're recording this. My perception was that 2024 was a wait and see year for all of us. We were in the middle of some wonderful projects, actually adding revenue streams to some of our existing projects where we were seeking capital for development. And it was slower than ever. We still succeeded at raising the goal, but it took at least twice as long, if not more. So 2024, I feel like most passive investors were being patient. We call our type of investing, like yours, we call it direct investing, right? Direct private investing. So we spend a lot of time in 24 just focusing on getting to know our investors and the community. 2025, my prediction is there'll be a change in the landscape here. It seems like there's a new administration that's bringing in America First strategies, which I think would first have pain, kind of like a little bit like everything in life. When you go to exercise, it's terrible for months, and then all of a sudden it's rhythm. So I think there'll be disruption here in quarter one. Long-term effect, I think we're moving in a great direction as far as, focusing on the basics of government. So I think that'll eventually have an impact of more oil in the country, which should be a major driver to reduce some production costs and inflation. I think in the end, after we get through a rocky couple months, we'll have a very strong 25 with a lot of positive force going into 26. That's my gut. We're seeing strong demand in our business. So I guess, 24 was softer. We're already seeing stronger 25. And our business has this magic of being able to look into 2 years out because one of our best strengths as a company is selling weddings. And weddings are an 18-month purchase cycle. So right now we're selling 2026, for example, and we're doing very well. So we see that the economy, through the consumer at least, is looking like they believe in the future.
Love it. Love it. Okay, and I want to dig into that much, much more as we get into it, but can we back up a little bit and kind of walk the audience through your background and what it is you're doing exactly with the business?
Sure. I'm living a dream, in a way. My wife and I get to be partners, and we have hundreds of wonderful direct investors as well, but we have been exposed through, this is my second time leading a large turnaround repositioning company. The first I did with a family office as the president of the hospitality division, and we bought distressed. We actually originally 14 years ago got into this because the family office already owned a distressed resort property. Remember 15, 16 years ago, there was a boom going on. It ended that. And so they languished with an asset they bought in the boom, getting ready for redevelopment as houses, actually. But it was a hospitality asset. And so why tear it down post 2010 when there's no good economy forecasted for a while? They didn't want to tear down at least the building they had. So in 2012, we repositioned and opened up our first ever resort for that business. That business was called Icona. It's relatively well known on the East Coast now. It became wildly successful. And that was just a thesis we had. What if we restored really tired properties on the coast? That was that business plan. That are in great locations but have no great hospitality assets. The Northeast, which is where our epicenter was, is tricky. You have this wonderfully affluent vacation experience in the summer and nothing much more the rest of the year on the beach. We were able to perfect, I would say almost perfect a model that could handle that seasonality, create luxury experiences. We ended up growing 300%. And, the discovery, though, led us to our second company, which is what we own today. And we've had, open for 6 years. We've bought 4 resorts, and we allow direct investors to be our partners. You don't have to be a family office, right? And that's the magic of this type of a capital aggregation through private placements, which is what you're familiar with and what your audience is familiar with, is so powerful. We can get into it. But today, we took our learning and education from growing that resort business, had a small exit as the president, became a partner and founder of these companies, both capital, accountable equity, and then operations, VIVAMEE. And we are off to a great start. And it's a joy. It's kind of everything you might think it is, right? You get to buy and restore, just like those of us who love watching houses being flipped and design elements and style and construction facts. We get to do all that on a very large scale with resorts.
I love it. So you're buying tired, distressed, existing resorts that
Correct.
may be kind of the same thing we're doing with multifamily primarily.
Correct.
And then do you do like full gut renovations, full new branding? Okay.
Our thesis was going to be we would buy them. Out of the 4 we bought 2 out of bankruptcy, which means we got a phenomenal basis to a cost to replacement value. And so basically, I would say we pay nothing for the business operation, and then we don't even pay a third up to 40% of the value of building it. Then we take it and reposition it. So sometimes, and for the first few, they were full guts. Yes. They don't always have to be. Our business model is twofold, right? It's construction repositioning for aesthetics and style and today's traveler, but it's also operational advancement. So it's a business turnaround strategy, kind of like the Cody Sanchez model. You buy a business that's not performing fully, add the revenue streams and productivity, and the business goes up in value. So we get the lift of both things, right? We get the lift of real estate value going up, and we're building a massive cash flow business. I find our type of hospitality real estate to be like a kind of a really nice blend of people who are hungry for both wealth engines, real estate and also massive businesses. So we kind of combine both in our industry.
Okay. And what size assets are these? Are they?
Yeah, good question. So our portfolio now is over 100 million in 4 properties. However, we have one. Our business is a turnaround company. So it'd be like private equity buying a company. It takes 3 years to get the new value and 2 years to get it fully maximized. So that's how we look at it. It's depends what year I bought our property. So we bought the first one 6 years ago, the second one 4 years ago, the third one 2 years ago, and the last one a year ago. So that means at each one of them, they're at different parts of their turnaround. So the furthest one out, the oldest one we've had, has gone from a $5 million purchase price to over a $52 million appraised value this year, pending the completion of the spa we're in the middle of. So that's the kind of lift we're dealing with. And we think it's only halfway finished. However, bankers like to call that stabilized. So we'll let them call 50 some million stabilized, but we know what's going on the back end, and it has a lot of runway for growth.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
Does it usually take a couple of years to do the
physical renovations? I've gotten a little wiser in my old age. I'm not rushing the full. If we have a business plan with 6 revenue centers, and number 1 is the weddings, which is how we look at the resort world. We say, let's develop the wedding industry first, and then we'll get to all the other wonderful opportunities. It's the fastest way to be profitable. It's the fastest way to pay investors a preference, and it changes the value quickly of the business. So no, I don't overly rush it anymore. I rush what needs to be rushed, and I methodically do the rest. So I would say it's a year to 2 years of pieces of implementation of like the renovation phases coming on board.
Mhm.
And then about 5 years later, which is where we are with one of them, there's always this extra bite at the apple called land development. And so what's really cool, Randy, is we buy our average properties 200 plus acres. You know, two of our four have golf resorts and two of our four have wineries. And all of them come with massive acreage. Some of them are on the water, some of them aren't on the water. And when I say the water, I mean Chesapeake Bay, Maryland. So we always say, great news, investors, we are not pro forma strategizing real estate development. We are only strategizing business turnaround, operational improvement, profitability. When we get a chance to do land development, it'll be actually accretive on top of the pro forma. And we do that out of prudence. I've been in land development now since 2000. Not all land development can be rushed. Most cannot be rushed. And so sometimes we're buying these properties with some entitlements for future, and others without entitlements. Neither of which, do we try to implement, and I call it phase one implementation. We don't. So right now we're just getting excited about land development at the oldest one we have, and we're in the talks with municipalities and engineers, and it's exciting.
Love it. Love it. So I'm curious why you start with the wedding revenue stream first. Is that simply because it's more grounds based and then you just have your facilities that you need to renovate, or
Good
what drives
question.
that?
And by the way,
Yeah.
it's a little bit of a misnomer. To do a wedding well, you need a beautiful restaurant space, catering space, and rooms. But we put it through the filter of that business first. Why do we do weddings first? I would say, we grew to be nationally ranked as one of the best wedding operations in America. I think one recent report said we were number 11 out of 50,000 or something crazy. So crazy success in this wedding world. But here's the great thing about weddings, why we start there. By doing an expensive go-to-market marketing strategy, we will be seen. By doing a renovation plan with the right architectural impressions or looks so that it's Instagrammable and authentic to what the bride wants, we will get sales while we're under construction. So a well-done renovation with a great execution team like ours, brides will pay you for a venue that's not finished. So it may still look like the ugly version of the venue and does not yet look like the beautiful version, but the renderings show the beautiful version. So you get this early, I don't know, it's almost like a hack, right? Because of our track record, because weddings are so far in the future, they actually understand that we'll get it done and they'll be one of the earliest ones using it. And the last thing about weddings in the Northeast of America, not every part of America is like this. The bride will pay us 25% of the full cost today in the year 25 for 26. So we actually have really strong working capital positions or deposit capital positions pretty quickly. So it really takes it's a really interesting hack, right? Because it takes this business turnaround, real estate repositioning, and adds a layer of security because it's a contract. You really can't get out of these wedding contracts. So if you and your spouse break up or something, you forfeit the amount paid to date, right? You don't have to pay the rest, but you have to forfeit. And 99% of the time, it doesn't happen, thank God. And when it does happen, most of the time the forfeiture is not even disputed. So it's really pretty much retained earnings at that point. So.
Real. Okay. Yeah. So it makes sense why you'd go that path. Now, you've been doing this for 6 years, which means that you started just before COVID happened.
That's
so
right.
I'm curious that probably made for some pretty interesting conversations with weddings that were planned during that time.
Yeah, I mean, I love taking credit for being a genius through the COVID, but it's not fair. We actually came out of the COVID great. We did 2 big pivots during the COVID. I should make this funnier. It's not funny. I'm being too serious. No, during the COVID, we had it was crazy. It was February 2020. We finished most of the construction of our first beautiful venue spaces, and weddings began in February. Our first few post renovations happened. Very few, like a handful. And then March, we were going to be busier. In April, we would be very busy. In May, we would crush it. And we had already sold pre-COVID, I would say, to be conservative, over 300 weddings in that property. And we had achieved millions of dollars of deposits. So we were really off to a great start on paper. Then the COVID comes in March 2020. And because it was nice, right? Like when you're in hospitality, a lot of times you make mistakes and you have to take the blame. But when the government shuts you down, you don't even have to take the blame. You're the
Sure.
victim too,
Sure.
right? So
Yeah.
everybody
Yeah.
was super kind to us, right? All the brides. And we were super kind to them. But you're right, legally, we weren't allowed to do anything in 2020, except for one loophole, couple loopholes. As long as you did non-large group events for catering or food and beverage, you could do it as long as it was outside. As long as it was outside. So we did not encourage it, but a few brides did like a kind of an elopement package. We thought, great, I'm glad we did it. That did not make much of a dent. But what did make a dent was we opened up an outdoor restaurant in this beautiful botanical gardens that would have been for weddings. But we had just built it. It was gorgeous. And so we put a stage out there and we did concerts outside. And I think we brought in several $1 million in a few months. So all of a sudden, we have the money coming in from wedding contracts. And now we have this pretty robust restaurant style business, which wasn't exactly our business plan. We had to pivot into it, right? And we definitely didn't picture using the lawn for it. We thought if you're going to have a restaurant, it'd be inside, right? And then the forecast becomes the fall, and the fall becomes the winter. So how do you get through those times? You're still not allowed to do a wedding in 2020. And there was this awesome, this is the genius of the business plan, which we're blessed by it because it's like what we wanted to do, but there is a lot of genius in this. We rolled right into a concept we had for the far future called a winter festival. And we're up in the Northeast. I don't know if you guys have ever been to Europe, though. There's a lot of these winter festivals with hot alcoholic beverages outside, like hot wine, spiced wine in the Alps, really cool cheeses in the Alps off these rotisserie grilling.
Nice. Yeah.
Awesome, cool stuff in Europe. And Melanie and I got to live there for 4 years and watch European
Wow.
culture deal with the cold. So we said, we got to do one of those European village concepts. And so we launched this massive 5-acre village, put an ice rink in the middle of it, partnered with all these kind of out of business entertainment companies that brought entertainment every day, we had figure skating, dancing going on. We had NHL TV announcers that didn't have a job. So they came and partnered with the hockey rink. It was not a hockey rink. It was an ice skating rink, but
sure,
it was so huge that on a given Saturday in December 2020, we would have 4,000 guests on one day.
Unbelievable.
And you're like, wait a second, isn't that against the COVID? It was this crazy loophole. Since we didn't do anything inside, amusements were legally allowed during the COVID in our state. So because we had the ice rink and an outdoor fun thing, it became like an amusement. And we bypassed all the violations and became famous. Like it was in the Wall Street Journal. It was on TV all the time. And so it put us on the map for the next revenue stream, which is our live ticketed events, experiences. So we do the weddings, we do the live ticketed, we have hotels, restaurants, we're opening a spa. So one property could have 6 multi-million-dollar revenue streams.
Unreal. And so was the live events, was that even part of the business plan when you first got started? Or
not at that scale. I mean, this was the scale of, they weren't internationally famous acts, but they were regionally enormous acts. And they were coming here because there were no stage opportunities at that time.
Right.
And they were bringing hundreds and hundreds of followers. And
That's
they're becoming connected to us, and we have a database of hundreds of thousands of names.
Let's dig into the investment if we can, because that's what we focus on primarily on this. You mentioned this is direct investment, very similar to what we do in multifamily and self-storage and all these others. So are these structured more similar to like a development program, or are these are they cash flowing by year 2 or something? What do the structure of these look like?
Historically, we've been super generous on the investor side, and we always want to be. The earliest investors, we always say we bought in together at the same dollar for dollar. So the earliest investors, it was a very generous split of equity and preference payments as soon as the company could provide it, but accrual of preference payments from day one. Now, in the 6 years we've been open, we've always made at least partial preference payments every year. No capital calls, no distress. There's been stresses, but those have relatively been positive, meaning, the COVID changed the business plan, which delayed refinance. So those are some of the negatives, right? COVID had a pretty significant positive overall on our industry, us in our industry. For example, to finish that story, wedding sales were legally allowed to happen during COVID. Just wedding events were not allowed to happen. And during the 10 months from that point till till the next year, 21, we sold 400 more weddings, and we sold, we packed, and we created this kind of like multi-year surge of weddings that ended last year in 24, but now we're on a more stabilized number. The investment looks like a very typical to an apartment syndication at this point. So preference payments should accrue by the second year, should distribute by the second year, if not the first year, depending on what we buy. So we've had different offerings for different projects. The split is perpetual that's how we build our model now. So unlike some multifamily businesses, we're not actually trying to sell the property in 3 to 5 years. We're looking to refinance only.
Okay.
And build a sizable portfolio. Our goal right now is 25 lifestyle resorts, nature inspired, drive to from major economic centers, with a massive profitability from weddings and other scheduled events. That's our niche.
All East Coast based, or are you guys branching out?
Currently, probably we've been looking in Texas. We tried to buy a portfolio of 3 at one point. We backed off. Eventually, we'll probably be through, I don't know if you want to call that a J curve on the country, but we're coming down the Eastern Seaboard. We like to buy them in pockets, though, and we're buying relatively historic, unrepeatable properties that just were either run by a family for 30 to 40 years, so they never implemented great business plans, or they delayed the maintenance. And you know what's funny? In our situation, coming in with a modern hospitality amenity package, we actually prefer that they delayed maintenance, because that means we're going to pay well below basis, and then we're going to be able to renovate with the money we would have given them for profit. And that's kind of ideal for us because we love history. So if 2 of our buildings, one is 200 years old, that's in Maryland. And if you were to look at it from the outside, it looks like a postcard of history, right? Beautiful inn on the water. But when you go inside, it feels authentic, but really luxurious. And that's the ideal situation, right? Buying the right spot without the right fit out, and a slow business plan that could be accelerated.
And so these are, I think of passive investments. A lot of times you want to move further away from operations because there's less risk when there's less operations dependent. This is obviously very heavily operations dependent. So the wedding industry itself as well is very specialty and specialized as well, with some kind of big names in that space. So what are you guys doing to kind of overcome that operations risk that you might expect in this type of industry?
That's a good question. We are getting into this industry a little sideways compared to most people that might get on the show here who talk about syndicating apartments for the ideal of passive investing. That is great for the passive investor, but we are operators. And so we're coming into it with a deep expertise in maximizing the value through operations. So we're more like, if people want to invest in the Cody Sanchez of this world, or the people that are actually buying businesses to turn them around, we're more in that vein. A lot of wealth can be generated by operating and extracting great profitability out of businesses. But for us, it's deeper, right? So about 12 years ago, we built that first resort for the other partner that I was a small partner in. And we thought, make the building pretty and the guests will come. Well, we made a big mistake. We hired operators that were limited in their capabilities, and we handed them a Rolls Royce, like really beautiful property. The reason they struggled to operate it, though, wasn't because it was pretty. It was because it was seasonal. So we kind of almost love these niches where we can totally exploit our operational talent. So that developed us into a robust operations company when we had to fire them and build out our expertise for the next 13 years now of being high value operators. And there was a conversion moment, like an epiphany moment, that changed my life in the second year. Here we are, still thinking we're land developers, still thinking all we have to do is operate this profitably, run it by the numbers, do a good job. And hospitality is more challenging, and the opportunity of failure points are high. So we would have chefs quit or whatever, and we'd have restaurant managers quit those first few years before we really build out a massive bench. Like, we're hundreds and hundreds of staff now. And I walked into those restaurants, ended up having to serve, even though as president, serve in interim roles as direct management, right on property, living in the building sometimes even to get us through crises. And I fell in love with the power of hospitality. And you see it, there's pop culture books out there called Unreasonable Hospitality. And then there's my buddy Horst Schultz from Ritz-Carlton.
Yep.
See, when you embrace hospitality as a somewhat unique type of business that is spiritual, and you fall in love with the good you can do for the people that work with you and the people that you serve, it becomes intoxicatingly powerful. And the great news is you couple that with really high profit business strategies like weddings and ticketed events and stuff like that, that fill the hotel intentionally. I call that there's natural demand for every property, and then there's unnatural demand. And we focus on the unnatural. Natural would be you're on the beach and it's summertime. That's natural, baby. You're going to fill up.
Yep.
Guess what, though? Some beaches are seasonal. So what are you going to do the rest of the year,
Sure.
So we fell in love with the power of hospitality, and that became our life. And that's actually the name of our company. VIVAMEE is French for reviving the soul. And because of that, we are building our version of a brand. There's brands out there that have 20, 25 properties called Auberge. We're kind of our version of Auberge. They're 5-star quality. We're 4-star quality. There's more profit in 4-star than there is in 5-star.
Okay.
And we're building something that is inspired by operations. It's almost like, you get my point, Randy, right? It's not like, oh, that's an afterthought. It's like, that's where we create power.
That's the goal. Yeah, that's the goal. Yeah, and I noticed on, I think, your website, and certainly on your LinkedIn, you talk about the number of souls that you lead, which I thought was neat. And at first, I didn't quite understand what it was, but these are your employees, right? This is the soul of the properties.
With hundreds of employees, we take it real seriously. We try to connect them to the mission. That's why we made the name the mission, Revive Souls. That's our goal. And we try to teach them, this is pretty powerful, actually. You can use this in your business, no matter what industry. We broke everything they need to learn down into the name of the company and 3 virtues. Say, great news. There's 3 virtues that we ascribe to. This is how we want to treat you as a teammate and the guest as a guest. And if you don't like these 3 virtues, it doesn't make you a bad person, but you're going to hate working here. So don't even apply. Joy of service. We have 100% commitment to the joy of service. Even though we all have bad days, we find that we try to employ and only hire teammates that are naturally coded to find joy in service, which is the majority of population, but not everybody. Some people hate people. They can't work here. 2, humility is a second virtue we need to pursue. We are going to make mistakes. We own it and we apologize, but then we do that because we see your infinite dignity and worth is equal to my infinite dignity and worth. That's very Horst Schultz. He used to say at Ritz-Carlton that we are ladies and gentlemen serving ladies and gentlemen. So that principle of the dignity of the server is key to our culture. And then the last one is our secret sauce. This would be equivalent to Walt Disney's secret sauce was called magic. He wanted to create a magical moment. For us, it's ministry. We want to create a moment of ministry. And we actually celebrate it every week in the team meetings. We say, hey, who saw a moment of ministry happen? Ministry is when you take a simple task, but do it for the good of the other person. It becomes spiritual and it becomes an act of love. And one of the ways we teach teammates to make their work a ministry is we say, think of it this way, Jen or Bill. You're going to probably deliver that cup of coffee and that delicious dish or that glass of wine because it's a task you have to get done to finish that table's work. In your mind, while you're walking to that table, you have the power to change it to a gift. It's a task, has to be done. But if you mentally make it a gift of kindness, it becomes a spiritual transaction. They feel loved, and obviously it creates the moment of ministry we're trying to create. So we're trying to do something here that harkens back to the original meaning of hospitality. Hospitality was always seen as a spiritual activity. And we want to remind our modern guest to hold us accountable to that. Now, we do get tough criticism because of that.
Sure.
And we get tough criticism from our staff because we're not perfect. But that's our goal. And that's the power of this company and this business.
Love it. I love it. Well, Josh, this has been a great conversation. I watch hospitality companies. I have not dealt with them and have not dug into them from an investment standpoint, honestly, because they scared me a little bit because of seasonality, because of the impacts of the economy, those types of things. But this has ignited some interest in this, and I'm sure I'll be digging in much more. So thank you for walking
You're
through
welcome, buddy.
your business model. Yeah. Well, if we can, I do have a few questions I'd like to ask everybody before we wrap up. So,
Yes.
folks that are interested in learning more about this space and passively investing in this space, what's a good educational resource you might direct them to?
Yeah, so we have one available on our website if that's okay to share. If not,
Absolutely. Yeah.
other ways. On our website years ago, we put together a book, Melanie and I, called I think it's the 10 Steps to Resort Rehab Riches. Cheesy name, somebody else named it. But the point being, here's our 10 steps, and they're all self-intuitive. And I find that some people love this space because they move from Airbnb up, right? They want to do bigger and bigger Airbnb. So that's kind of a passive/active minded person might want to read that. The passive person might be able to understand the model better if they read that. And that's available at accountableequity.com, just right at the bottom of the page. Just get it for free. Now, the other book that inspired us, for years and years was, I do think, Horst Schultz. It's
Mhm.
called Excellence Wins. And of course, for me, how we try to operate our business is actually Dale Carnegie, How to Win Friends and Influence People. That's maybe not the easiest book to connect
Yeah.
with my job, but it's the best book we teach human interaction skills.
One of the all-time greats. Absolutely. What are your favorite books that you're reading or podcasts you're listening to
Yeah.
today? Yeah.
Energy Bus by John Gordon. I get to
Okay.
if you know this gentleman, he's a phenomenal public speaker, keynote. He's
Okay.
written several books, but the Energy Bus, it's all about leading people, leading yourself. Look, we're going to all struggle. We're all going to fall down. So how do you get back up? And this is just a mental exercise to bring yourself to the energy you need to succeed.
Interesting. Okay. Yeah. And who is the author again? John.
John, Jon Gordon. He's pretty well known. You'll see him as soon as you Google it.
Okay.
It's called
Yeah.
The Energy Bus. You'll love it.
Love it. Okay, thank you. All right. So, folks that are considering investing in this space, what are some due diligence questions they should really be digging into that are unique to this asset class?
Yeah, I mean, I think hospitality, I should have told you, has several other categories, right? And there's the branded hotels, and then there's the branded select service hotels. So if you're looking at those different kinds of questions, you just probably want to stay down the path of occupancy and cost per room and revenue per available room, where it's going, and when the next PIP is due, or property improvement plan. If you were to specifically be looking at properties or portfolios of property, those are the key drivers of value and or cost. In our space, though, you might want to just ask the questions of what is the moat, as Warren Buffett says. What are the moats you're building around this type of hospitality? And for me, I always say ours is to go after the unnatural demand. Natural demand is the same for everyone.
I love it. Yeah, very good. Yeah, and unique perspectives for this asset class as well that we don't dig into a lot of the others. So, thank you for that. And the PIP is interesting too. I'm curious, in your space, what's the PIP in your space? Is that usually 5 to 7 to 10, 12 years? Okay.
Yeah, we're a younger company, so we've always built with a little higher finish quality, and because we believe in timeless beauty, things like Carrera marble and stuff like that. Honestly, we don't see those being pipped out because they're authentic. Whereas in Marriott, for example, the PIP is always style driven to that era, and it's really obvious when it's in style, and it's really obvious when it's out of style. So wear and tear is that actually the second reason for a PIP. Number one is style change.
Interesting.
So we try to mitigate style change by classical pieces and piece architecture. And then we expect, with higher finishes, which is what we put in, we do expect to get to 10 years. But of course, that doesn't mean you don't change pieces out.
Interesting. Okay. Very good. All right. And I know that you and I met through GoBundance, I believe. So I'm curious, is there a recent bucket list item you've checked off your list or one you hope to in the near future?
Melanie and I took the entire family, which is we're 10 kids and 2 adults, so we're 12 of
No
us.
kidding.
Legit
Wow.
crazy story. I didn't know we'd have such a large family, but I was happy to oblige, as Melanie wanted more children. So we took them all to Salt Lake City and went skiing. I mean, to Utah and went skiing at January 1st. So
This
that was a
past
heck
year?
of a big bucket list.
Yeah, fantastic. And what the entourage you must have had to get 12 of
Big,
you guys moving around. Very good. And I
big.
would imagine your kids are all older, out of the house,
No,
have families
no,
of
I
their
have a
own. No,
5-year-old little guy, almost 5, and a 25-year-old adult lady. 6
no
ladies,
kidding.
4 dudes.
Unbelievable. Unbelievable. All right. And then our final question, Josh, we ask everybody is if you had 100 grand to invest today and you couldn't put it into one of your own deals, where would you put that?
Yeah, I'm intrigued right now by co-living, and I don't have a direct angle for you to get it involved, but a gentleman who was just on our big capital hacking podcast is Sam Wegert from GoBundance, and he shared his strategy in detail, and so we'll have that released in a few weeks.
Awesome. Very good. Well, Josh, thank you so much. This has been a lot of fun, and I feel like I learned a lot. And it seems like just when I feel like I'm getting my buy box figured out, I have another operator come on and gets me all excited about another asset class. So thank you and no
Well,
thank you all at once.
yeah, you say it right, though. In our direct investing world, Randy, deals and asset categories are valuable, but the operational team is the key. So, we know that's your problem, right, Randy? You have to make sure you really spend time with them. And we appreciate that about people like you and all of our investors. So we actually, to finish on this one crazy thought, we began 6 years ago raising capital, and our whole theory was that the most important thing is to bring the investors to see the assets and to meet the team. So every year we have free masterminds for our investors at the properties with keynote speakers, not so much to raise money, but to help them get to know us deeper and deeper and deeper. And then we do all kinds of in-person events throughout the year. So even people from the West Coast and Europe fly in for these, even though we're on the East Coast. So yeah, getting
Awesome.
to know the operator is the number one priority in any direct investment.
All right. Well, Josh, thank you so much again. This has been a great conversation. I really appreciate you coming on the show.
We appreciate you, sir.
All right. And to the audience, as always, we encourage you to continue that education journey. And just as important, if not more important, is to make the decision to make that first passive investment. I'm convinced that once you do, you will just wish that you had started that much sooner. So be sure to join us again next Thursday for another great episode. And don't forget to like and subscribe.
Well, there you have it, ladies and gentlemen, another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.